Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 20th of December. Starting off with the FTSE 100, which seems to have some seasonal cheer here, just in time for Christmas. We were looking for 7,800 by the end of this month, and it looks as though we'll hopefully get that. Above 7,800, in fact 7,810, and that red May resistance line we're looking for up to 80.60 by the end of next month, which is obviously quite a punchy call. The upside valid while we hold above that broken February resistance line from earlier this year, 76.30. So above 76.30, 7,800, and then perhaps 80.60. Moving on to the DAX, and I suppose if the FTSE's up, the DAX is going to be up even more, but actually it is flat, just a couple of days away, a couple of sessions away from a golden cross in that consolidation between 16,600 and 17,000. Breakout to the upside could take us up to our ultimate target here, or at least for the near term, 17,900. Otherwise, on the downside, 16,500, and the old July resistance are in force. Moving along to the Dow, and here you can see that we're very close to our target there, around 37,800. We were looking for that by the end of next month, and the way things are going, obviously it looks like we'll get that by the end of this month. I'll have to work out what the next target is after that, but obviously at the moment things looking pretty strong, and the upside valid while we hold above 37,000, which was recent support for this market. Moving along to Bitcoin, which had a better day yesterday within the rising trend channel from the beginning of October, still dithering a little bit near 43,600, but it does seem that that rising trend channel is in force, and while we're above the floor of that channel, 41,000, looking for 50,000 by the end of next month. It's apparent that there has been a rebound in crude oil, and here it's worth taking a look with the Yemeni situation there. Here we've had a bear trap from below the November support, 72.50, let's call it, and above that we're looking for a retest of November resistance just shy of $80, hopefully in the next 2 to 3 weeks. On to gold, which has been pinballing within the range of the 50-day moving average, currently just below $2,000, 1995, and that rather obscure May resistance line there at 2060. Looking for an end-of-day close through 2060 to give us a retest of the best levels of the month, the December spike, and then up to that June resistance line projection as high as 2190 by the end of next month, or even sooner. Moving on to the stocks, starting off with Afentera, which looks like it's going to be one of the big stocks of 2024. Here we've got this rising trend channel that's been in place since early 2021. The break of recent resistance around 33-34 pence gave us the prediction that we're looking for 42 pence, hopefully by the end of next month, and actually the way things are going, might even scrape that by the end of this month, but at the moment 42 pence by the end of next month, while we're above the low 30s, so 31-32 pence on that. Worth keeping an eye on Argo Blockchain, partly because the bears have maybe given up over the near term on this one. They were looking rather good around the early part of the autumn when the shares were below 8 pence, but we're now nearly double that and above the initial December resistance of 14 pence, looking for 20 pence by the end of next month, or even sooner. Maybe there's a chance of a move towards 20 pence by the end of this month. Worth looking at Corcel again as well. It just looks as though it's getting ready after a consolidation since the beginning of last month to have a new leg to the upside. The difference this week is that we've got a rising 50-day line which joins the rising 200-day moving average after that golden cross that we had back in September. That means that we are in bullish mode on this situation and looking for up to 0.8 pence by the end of next month if we get a swift break of recent 0.5 pence or 0.49 pence resistance on that situation. Moving along to Condor, and here two gaps to the upside unfilled, rising 50 and 200-day moving averages, so we're looking for 30 pence maybe by the end of this month, while we're above the 200-day line at 23 pence. Another bear target, which seems to have given them a slight pie in the face, is Eden Research, and here two unfilled gaps to the upside as well. The original target 5.5 pence easily achieved, and now looking for 7.5 pence by the end of this month. If you're cautious, obviously just wait for that 6 pence area to be consolidated first. Eurasia is next, and here it's interesting to see that the shares have nearly doubled off their low this month, around 1.25 pence. I think we hit 2.5 pence this morning. Just waiting for this 50-day line to start curling up. If we can get that, then it'll be 3 pence as the initial target, and then up to 3.5 pence maybe by the end of next month, although obviously that is quite interesting as a contrast to what the fundamentals are supposed to be there. But a very strong rebound. Looks like a bear trap situation. On to Filtronic, which has delivered two £4 million contracts in successive days, and no wonder the shares are up. But they shouldn't really be up to where they were back in 2018. But the technical target there, up to 34 pence by the end of next month, while we're above the 20 pence area after achieving our initial target there around 23 pence. Genedrive is next, and there was a glimmer that the shares were turning around earlier in the month with the bullish divergence after the lower low, bullish RSI divergence. We hit our initial target there around 10 pence, and we've done that twice now. Above 10, looking for up to 15 pence by the end of next month, hopefully much sooner, which is also the area of the 200-day moving average and a September resistance line projection, but a nice inverted head and shoulders type move there on that stock. Petrel is next, and here you can see that the shares have delivered a decent V-shaped rebound there. We want to see an end of day close through basically 3.1 pence. Above that, looking for 4 pence by the end of next month, or even sooner than that. Petrofac is next, and this has also been bubbling away over the recent past. Rising 50-day line near the lows, so that suggests that we're going to break through recent November resistance to 3.75 pence on an end of day close basis to give us the initial target there around 4.3 pence in that red line from back in July. Big picture target maybe for the end of next month up to 6 pence or 6.5 pence, which is obviously a punchy call, but the longer we stay above that 50-day line near 3 pence, the better for the cause. Looked at Petrofac previously, and the message was that we were looking for an end of day close above the 23 pence neckline resistance. Unfortunately, the shares would just gap through that, which makes it rather difficult, but we're still looking for a target there towards the 50-day moving average at 40 pence over the next 2 to 3 weeks. Ideally, there's no break back below the top of today's gap at 26 pence, and obviously everybody was waiting for a break of 23 pence on that one. Requested stock is next, one which I've covered quite a lot, and it's interesting to see whether RC35 can recover some of its old glories that you can see on the left side of the chart. Here it's interesting that we've got the 50-day moving average now rising. We've had solid candles over recent sessions, and looking for 16 or 17 pence by the end of this month as a minimum. If you're cautious, you just want to see that end of day close above the 50-day moving average. Just when you thought that TM1 was down and out, it's rebounded and rebounded quite well. W-shaped turnaround there, breaking the neckline around 1.05 pence. Above that, looking for the 200-day moving average area at 1.6 pence by the end of this month, and then maybe up to 1.8 or 9 pence by the end of next month. Ideally, we stay on the right side of that 50-day moving average. Finishing off with Wildcat, where things are purring along quite nicely, perhaps in the run-up to the AGM on Friday. Here we've broken that resistance line there from back in September around the 0.18 pence level, and we're looking basically for a retest of that spike back in November towards 0.3 pence, ideally filling the gap up to 0.32, the gap down from back in October. So let's say 0.32, the best case scenario target over the next 2 to 3 weeks, while we're above the 0.18 pence level on Wildcat. That's it from me today. More updates tomorrow.